Welcome, everybody. Crypto Answered. It's a Wednesday. It's not a Thursday, but we are here. I wanted to make sure we did not skip this week because I'm going to be traveling tomorrow back from Atlanta to New York. But today is Wednesday, August 24th, and you are here for Crypto Answered. Thank you all for tuning in, spending your time with us. Thank you to all the guests. Got some really wonderful guests tonight, as we always do. Have a lot of respect for all the guest speakers that are going to be up here sharing their time and their wisdom and their humor with you, and good decisions and bad decisions. We all make them. We like to discuss that and sort of flesh it out and figure out how we can learn from each other and really just get as much of a grasp on what's going on in the market, or at least a semblance of it as we can, so we can make some good decisions. But again, you are here on Crypto Answered. My name is Kellam. I'm your host. Again, y'all tuned in here on Crypto Answered. It's August 24th, Wednesday. We are brought to you by our friend and partners, PennyFly Entertainment, which you can find at Penny ENT. At PennyFly ENT. And with them, they really basically broadened our team on the back end, so we can really get distribution of this out to as many people as possible. So following the live spaces here, where we do like to bring some of you up and answer some questions and have you engage as well when we have time, if you're listening here on Twitter. But you'll also be able to find this about 24 to 36 hours after the live episode, the live podcast here. It's pushed out to iHeartRadio, Spotify, Apple Music. So if you miss it here, then you can always pull it there, or just hit it on either of our Twitters and basically follow from whatever channel you like to. So with that being said, we got some really great guests tonight. We got Dan Gambardello, who is just wonderful guy. Not only does he have a strong jawline, but he knows what he's talking about with crypto. He's been in the game for a long time. And I'm super happy to have him back on. He's not only, some people think he's a Cardano guy, but he's not. He's a crypto guy. And Cardano just happens to be a hell of a good coin to be involved with. He also does some really great Bitcoin TA and just wonderful strategy within the markets. And you can find him, if you're not listening here on Twitter, you can find him at Crypto Recruiter. That's RECRUITR for Recruiter. How you doing today, Dan? How you feeling? Thanks for joining us again.
What's up, Kelly? How are you doing, man? I appreciate you having me on, and I'm feeling good. Even in a bear market, I'm loving life. What can I say? How are you doing?
You know what? I'm good. I feel like I'm running a mile a minute because I didn't know I was doing Around the Blockchain today on the BitBoy show. So I did that and then had to run home and then scarf down some food and get this started on time. So I'll catch my breath here eventually once you guys share. But you made a good point about feeling good, even though it's bear market. I remember last bear market, I felt crushed the entire time because I didn't understand how to navigate it. And now, am I down on some of my investments? Sure. But I'm also looking at the bear market as an opportunity and capitalizing it so I could set myself up in the best way for the next bull market.
100%. And I'm loving being here right now with you. I got Plan C on here, Kevin, Jesse, CryptoVet. These are just studs when it comes to following just crypto data, especially through a bear market. And they're keeping the vibes alive. That's for sure. As we get ready. I mean, I want to hear their thoughts in terms of when that next bull is coming, but I'm just happy to be here tonight. So thanks.
Oh, I'm really happy to have you here. And all the people you just mentioned as well, all wonderful. I'm going to introduce our next guest. He's basically one of the residents on our show. We call him the Sniper. I think he was actually coined that by a tech dev himself. That's Mr. Jesse Olson. You can find him at Jesse Olson. That's OLSON. How you doing, Jesse?
What's up, Kelly? What's up, everybody on the panel and all the snipers out there? I see you guys. Like Dan was saying, happy to be here. It's always fun to be on the show with like-minded people in the crypto space and really figure out the markets. So thanks for the invite.
Of course, man. I appreciate you guys being here with me. And we'll get through the introductions rather quickly, and then we'll just dive right on into it. We also got he's been a regular on the show now at this point, and I always love hearing his take on the markets. And that's Mr. Kevin Svensson. He's got a wonderful YouTube channel. He's got so much stuff that he puts out. You can follow him at Kevin Svensson, which is SVENSON_. How you doing, Kevin? Thank you for joining us today.
I'm doing good, man. Hope you're doing good as well. And I also feel pretty good. I feel pretty numb at this point. Like, I'm so used to the markets at this point that it's not like my happiness levels are the same. My excitement levels are less, but it's just, I'm just chilling, you know? That's it.
Yeah, and it's you pointed it out, Dan. I think the people that are here on the panel that are still around, putting out content on a regular basis as often as possible. It's not just the content producers or people sharing or personalities in the space, but even everybody that's here listening. It's this group of people, whether you're somebody talking on stage or out exploring what options you can basically add a sharper edge to your knowledge base. Where the space has gotten smaller, both on the audience size, audience side, and on the basically crypto personality or influencer or whatever you want to call that term. Everybody has a different term for it. But we're the ones that are going to have those sharp, at least sharper edged blades going into the next bull run. We're going to be better prepared. So I want to congratulate everybody for investing in themselves and in their own education, because every one of you that's stronger and smarter in terms of your trade habits, your investing strategy, it makes the market stronger overall. So with that being said, we also got the wonderful Mr. Plan C, who's been a regular here as well, about as long as Mr. Jesse Olson, and you can follow him at The Real Plan C. How you doing today, brother? It's lovely to have you back.
Yeah, doing great, Kelly. Thanks again, CryptoVet and Kelly, for having me on. I appreciate it, guys. Always appreciate the invite, and yeah, great to see Dan, Kevin, and Jesse here. Big fan of all their work as well. So yeah, looking forward to getting into it. Just to kind of echo what has already been said, I mean, there's definitely a lot less noise in the space right now. That's very clear, and I kind of like use the analogy right now. I guess I would say that I feel like I've identified, there's an event coming, like a fun event coming, and just kind of like chilling, waiting. You're at a party, there's gonna be a party. You're just kind of hanging out, chatting with people ahead of time, and it's exciting, right? Even though it's not the party yet, I feel like I've identified that this is the right place to be over the next 5-10 years, and it's just kind of wait and hang out and wait for everyone else to figure out this is where the party's going to be at.
Yeah. So with that being said, welcome to the party, everybody. Let's do it. So we'll start. I'm not sure if Vet's mic's going to work yet, but Vet, is yours working now? Yeah,
Maybe.
there you go. We can hear you. How you doing, brother?
It literally kept muting me every time I tried to talk. It's like, nope, not today.
Not me. I love to hear that voice. How you doing, brother? How's everything going?
I'm doing good. Been kind of crazy here in Dallas. The weather has been a lot of flooding, so we've been dealing with that with some clients and other stuff. But other than that, I'm happy to be back in the crypto world. Excited to see what everybody has to say, and we'll go from there. So take back over, Kelly.
Right on. Well, again, thank you everybody for tuning in here. Thank you for all the guests that are going to be sharing your time, your wisdom, and your thoughts with us. We'll just jump right on into it. I'm going to throw the first question or the first sort of topic to Dan, and we can sort of vibe on that for a little bit. We got two major things coming up in the space, basically imminently, and that's the Eth Merge as well as the Cardano hard fork to Vasil. And these are obviously two major assets within the crypto ecosystem. And there's a lot of some overhyped and some underhyped speculation about is it priced in? Is it not priced in? I mean, there's so many different narratives that this can take, and that's also being weighed against what's going on geopolitically as well, with the Dixie absolutely going out of control. So much so that it's actually more likely that the Fed might have to step in and squash the dollar index, the dollar down a little bit, because it makes trade very difficult internationally when the dollar is just going bananas like it is, and other nation states can't. They have trouble even servicing their own loans because they can't afford, the exorbitant cost of the dollar. And so all this is like also downward pressure on some of the momentum and the possibility of what can happen with the merge. But taking all these things into consideration, how are you thinking about what's going on with the space right now with in this case, let's say Bitcoin, Ethereum, Cardano, just in general? How are you feeling with these merges in context with this incredibly bearish sort of canopy on everything? That's for Dan.
Yeah. So And it really is. I mean, these are like the top headlines in crypto right now. And I think there's definitely a different dynamic. And it's because we're in a bear market. And I've obviously been tracking Ethereum and the merge. I want to see it go off well. I want to see it succeed. But as far as like data goes, I've tracked Cardano obviously a little deeper. In particular, the hard forks that have happened, going back, to Shelley hard fork and just introducing staking. Mary hard fork, Alonzo hard fork, and those were like the previous big 3 hard forks for Cardano. And I started tracking them because Cardano was just performing ridiculously leading up to it. Like 60 days or so, I think was the window that I have, and I still track it, these charts. But I'm talking like over 200% gains pretty much on average going into these hard fork events. So I was very curious going into Vaso hard fork, which is it's a very, very big deal for Cardano. And it's long term, it's going to be an extremely bullish foundation to what's getting ready to happen with Cardano, and its scalability and just DeFi explosive growth in the DeFi space. Especially ADA holders, we kind of talk a lot about like just wait, sit back and wait world. You're going to see what's going to happen. Well, this is like a really big piece of that. However, no 200% gains like happening going into this event. And this is why I like to track data, is because we see how consistent it can be in different environments. So here we are, we're in a bear market environment right now. We weren't in Shelley or Mary or Alonzo hard forks. So I think in terms of this like dynamic of bear markets, rising interest rates, inflation, DXY hitting like a 20-year high.
Well, I mean, I'm not necessarily an expert on Cardano. There's just, you have like a natural sort of pull towards certain projects. And Chainlink has been one, most people know that. Like, there's just a natural pull that people have for certain things. And there's a lot of great projects out there. It's so hard to focus on all of them. But right now is such a crazy time. We have so much stuff happening, like you're saying, the Cardano, Ethereum merge, Mt. Gox releasing coins, US dollar index going parabolic, Fed speech coming up, and there's probably several other things that I'm missing here. And so what I've been saying in my recent videos is that this is more of a fundamental time where I'm like much less focused on the charts. And I can't really rely on the charts all too much. Jesse might disagree with that. But I'm just at the point where I'm kind of leaning a little bit more pessimistic right now, though, of course, long term, these are all fantastic buy prices. But I just don't think that we're out of the woods yet. We have the whole situation in China, the real estate issues going on there that have not played out yet. I personally think that the stock market isn't done correcting yet. And the Fed's going to be raising interest rates, which is going to cause demand for the dollar, which is going to be bad for asset prices. I think we're kind of just still in this very wacky fundamental range where the dust has not settled yet. And it's going to be volatile and weird and wacky for quite some time. So I'm kind of in a mode where I'm kind of more neutral than anything. Like, I think we're at least near the bottom, close to the bottom. We could test lower, but I think it's going to be more volatile, more just volatility than anything. And everyone's going to be spewing out their opinions. We're going to moon. We're going to go zero.
And getting mad.
We might just be, wait, what?
I said, and getting mad.
Well, yeah. I mean, in a bear market, everyone's pissed off because in a bear market, or well, I should say that when it comes to money, people get so emotional. So, all of us influencers, analysts, whatever you want to call us in this chat right now, we deal in a market that deals with money, which means we're dealing with emotions. So we are all very thick-skinned. The fact that we're all still here, because we take shit from people constantly. It's absolutely crazy. But yeah, I mean, I hope I answered some stuff there.
No, absolutely. I think it's we had Tech Dev on, wasn't last week. It might have been, I'm not sure. It was last week or the week before. and he was mentioning, that same point. People get so mad, or they try to call you out for being wrong, or you'll talk about a potential move that can happen. And when you draw out on a chart, an idea of where things can go. Some people look at where the line is on the chart, and they think that you're saying that the price is going to follow directly on that timeline. And in general, usually most analysts I talk to, when they're drawing the potentialities of up and down or sideways, they're doing it in terms of the direction, not the time frame. And also, there's a never-ending debate that's never clarified unless you're having a one-on-one conversation with somebody that you know and you have a similar level of understanding of the markets, that people are considering entirely different time frames. And you might be saying, we're in a bearish trend, and like, no, it's bull, or vice versa, whatever it is. And one person going to be talking about the 1 hour chart, another person's talking about the weekly, and then they're arguing over nothing just because there's not clarity there. And so we need to give we need to give everybody a little more, I don't want to say space or leeway, but we need to clarify what people's points are. If we disagree entirely, that's great. I love it when somebody disagrees with me, and I love it if I disagree with somebody else, and we can have a discourse about it, because I very well could be wrong, or I very well could learn something. And I think that's very important for all of us to take. But I want to throw that the same sort of context and all these things to Jesse, what your thoughts are and what you're seeing. And if you're also feeling, I don't know if you look at order books or anything like that, how often you do or not, but I was looking earlier today, there's like over $90 billion of liquidity above us and about 5 to 8 below us. Do you think with all this going on, and we have everything going on with Ethereum and Basel, and but then Bitcoin itself, do you feel like those pools of liquidity are going to sort of help shape that narrative with Bitcoin, or do you think it's going to kind of be following a little bit of what's being, the effect of what's happening with the Ethereum and Cardano news because it's so big?
Yeah, kind of basically what you guys were saying, that, I don't really, especially Kevin saying that I don't really follow the fundamentals when it comes to my actual trades, but I'm aware of it all, right? So I'm aware of everything that Kevin mentioned about, less about what Dan was talking about as far as like Cardano and, on the tech side, definitely above my pay grade on that. So, I really do stick to the charts, and even though I am aware of everything, and I don't know if necessarily the bottom is in, because I believe the Nasdaq and the traditional stock markets are they have a lower point to go, right? So I would say if you compare past Bitcoin bear markets, I would say would probably, this would have been, the bottom or very close to it. But that one wild card that I've been talking about or asking, the question, like, how would Bitcoin react and how would crypto react to a 2008 like bear market, right? So if that does continue to happen, we don't know 100% certainty, but if it does, I would assume that Bitcoin and the crypto markets will continue to go lower, based off of that. And one thing you can kind of look at is, the March 2020 lows. Maybe Bitcoin wouldn't have gone that low, but when the Nasdaq dropped, 30%, Bitcoin dropped about 65%. So I know you brought up the DXY as well, and maybe some good news for you, at least in the short term. I've been watching it. It's hit my my higher targets. It's hit 3 targets. The 4th target is a little elusive. It tapped my target box for the 2nd time at 109.3, but hasn't gotten into the box yet. So I still have a question mark there. But there has been bearish divergence since May on the weekly chart. So I put out that, it could continue future bearish divergence, just as we saw, Bitcoin from February to April. It can last for, days, weeks, or months, as I always talk about. So you got the DXY is put in weekly bearish divergence since May. And, so there could be a point of at least some sort of, maybe there's a bear market, bigger rally around the corner. possibly, while the DXY maybe breaks down, and then from this, more of a parabolic trend line that it's on, there's a lower, very bullish trend line below it, but this is a pretty parabolic one since, April, May, or let's see, let's get it's basically on this parabolic one since February 2022. So maybe it comes back to the regular bullish line, because usually things don't go straight up or parabolic forever. So just kind of watching that bearish divergence play out, and similarly on the other side is when Bitcoin's been going through this 9-month correction. Maybe around the same time, it gets some sort of bigger bounce that we all hope for as swing traders, for sure. At least get some relief, relief rally, something like that, bear market bounce, and play off of that. But as far as like the next bull run, I'm not seeing it for a while. Could take a couple months to play out. We'll kind of see, but it's really the overall bigger picture that's like, for the stock market and stuff, holding back crypto, in my opinion. So, maybe like Dan, he's talking about, it didn't, maybe we want to see a 200% bounce for Cardano or not, because maybe it's priced in, and maybe it's also a sell the news type of event too, right? So that's why it's hard to predict that stuff. So for me, I just need a duplicatable business. So that's why I can't rely on like the fundamentals. I just have to rely on the charts. So I know it's kind of a really long-winded answer, but that's why I focus on all day, every day. So.
No, I mean, that's such good. I mean, even like when we all talk and questions are thrown out or ideas are shared, it's wonderful to hear how different traders think through the analysis that they're doing and why they do it. Because for every crypto answered we've done here, which has basically been about a year now, basically every week for about a year. I think we've missed 2, maybe 3. I've learned multiple things each time, just hearing how all the different analysts consider and work through why they look at data a certain way, and how their actions respond to that data. So, but your answer actually kind of tees up sort of a question that is basically more directed towards the title of this one, or the topic title: bull signals and bear structures. I want to throw this one to Plan C, because I know it's actually been probably more so on the on-chain side than on just traditional TA, but there have been a lot of even traditional TA things lately, coupled with the on-chain metrics that, if you're looking at it blindly without looking at the context of everything else going on, just that data alone without context might say this is the best buying opportunity ever, and it looks like it's most likely going to go up, like basically imminently. And we felt that way, if we looked at it that way, without the context, it could have felt like that for the last 4 months. So I'm just curious, Plan C, what you're seeing right now, and how you're changing, or if you are changing any of the ways you're analyzing not only the on-chain metrics, but just your general sort of analysis from all the different signals you're looking at it. How are you looking at the market now with the context it's in? And where are you feeling? Are you feeling midterm bullish, bearish, neutral? Or are you just letting it play out and moving from there?
Yeah, for sure, Kelly. So I agree with you 100%. Like context is very important, and for me, I am primarily focused on the higher time frames, like I've mentioned before on these calls. So that's the lens I'm kind of looking through, is the higher time frame. Just being more of a long-term investor, I don't do really any swing trades or any day trading or anything like that. I'm more trying to DCA in and out of Bitcoin primarily on the higher time frames, and of course, Bitcoin being something that we can look to kind of assess entries on potentially some entries on some other good coins as well. But yeah, mostly Bitcoin, and also like the lens that I'm looking through things primarily is through on-chain data. That's kind of the one that the lens that I choose. I do look at what's going on with TA, and look to people that have more knowledge on that subject as well, to kind of look for confluence across TA and on-chain. But yeah, mainly on-chain and Bitcoin. I mean, there's just the most amount of data for Bitcoin, so that is primarily what I'm looking at the market through. I am interested in getting more into Ethereum as well, because I think that there's some interesting stuff going on with Ethereum, with on-chain as well. But yeah, with Bitcoin and the higher time frames, just from my standpoint, I mean, there's definitely a lot of X factors. There's a lot of potential headwinds. There's a potential black swans. There's a lot going on in the world. So, you got to take all that into consideration when you're factoring these things in. I do think, though, we have seen a very, from my perspective, looking through the on-chain, quite a similar cycle so far. Like, we've seen basically the same rhyme play out. Not exactly, of course, but we have seen a lot of similarities with these previous bear market cycles so far. So I haven't seen like a crazy deviation. I know there's a lot of narratives. I know there's a lot going on, a lot of potential ways that we do see that deviation. But I am seeing a lot of things play out very similarly so far. So yeah, I'm keeping, of course, in the back of my mind, okay, we have these headwinds, we have these potential, things we need to be aware of. But yeah, a couple things I'll go through really fast. So with on-chain, you can assess kind of the capitulation of the market in various ways. And there's three primary ways I'm looking at that through. One is the Bitcoin denominated, basically realized losses. And we already had, so I looked at it on a 90-day kind of time frame over a 90-day period. And we've gone for the third time in history over 3 million coins already that have been sold basically at a loss, or the amount of realized losses denominated in Bitcoin is over 3 million coins, basically in a 90-day window. The only other times that happened was last bear market bottom, like around the bottom roughly, and then the 2011 bear market bottom as well. So that's, to me, a huge sign of capitulation. That's like, that's extreme kind of capitulation. And then also for a peak, way of looking at it through a peak capitulation is a 14-day window. And on a 14-day window, I mean, we went over 1 million coins within 2 weeks that were sold at a loss. And that's actually higher than what we saw during COVID and higher than what we saw during the last bear market, but within the same range, like pretty close to, just a little bit more. But yeah, I mean, we had that peak, and that peak happened on June 18th. So we saw a huge spike in the Bitcoin denominated realized losses, and very similar, like I said, to those other two major events, we saw very similar capitulation. So again, it's this was over 2 months, or yeah, basically over 2 months ago now. There was a huge spike, and that's come down now about 90%. It doesn't mean we can't have another huge spike like that. We've just never seen that level of capitulation followed by the same amount or a similar level of capitulation a few months later. It's never happened in Bitcoin's history. It doesn't mean it can't happen. But these events, like the event we've already saw on June 18th, in my opinion, is something you don't really see very often. It happens usually every couple of years. So that's there's that. There's a bunch of other data points. I won't go through them all, but there's one that's network cost basis. So it's an interesting one, because when you look at realized, like the realized cap, basically you can look at the market cap. A lot of people are familiar with the market cap for Bitcoin. That's more based on the exchange, the price on exchanges. There's also something called a realized cap, which is based on the last value the coins were when they last moved. And so it's actually more showing the amount of dollars that have flown in, or that have come into the Bitcoin network and and also have left. So with the realized cap, which is kind of is more to do with the cost basis. So the cost basis of the network has actually had the biggest drop in the history of Bitcoin over the last 90 days. On a Z-score, we actually went down, I think it was about to 4, like -4, -3 and a bit, but 3 3/4 roughly. But this is by far the most we've ever seen. Like over the last 90 days, the network cost basis, that's basically all the coins in aggregate. We had the most amount of money, you could say, flow out of the Bitcoin network that we've ever had. So yeah, that's pretty much it. I could go on a million different things, but mainly from my perspective, we've really seen a capitulation already. And the question is, and what I'm watching for, are these events, the combination of all these potential events, the Mt. Gox stuff, the market crashing, potentially to new lows, stock market, is all this stuff enough to cause another capitulation of magnitude that we usually only see every couple of years? Because we've already had that event, in my opinion. So that's my main question. And I know the order books, can be thin, like Jesse was saying. There's a lot above us and not as much below us. So yeah, maybe the order books are really thin. We get a wick down to something pretty low. But yeah, there's a bunch of other models. There's like the delta price. There's all these like floor models, and there's about 4 different floor models that have never broken in Bitcoin's history. that are sitting between 13K and 16K. So if we break through like 16, or if we break down through 13, it would be historic.
No, I mean, I think that's all great, sort of the way your mind is processing that, and I really love a lot of the new signals you've been making, or the new charts you've been making, through the workbench inside Glassnode. But
I'm a lot
want to
better.
throw.
I'm a lot better. Sorry, Kelly. I'm a lot better
Go ahead,
at
go ahead.
making them than explaining them on these calls. So yeah, maybe people, if they want a reference for them, just check out my Twitter, because sometimes I don't do as good a job explaining them as making. It doesn't do it justice. But anyways, sorry. Go ahead.
No, I mean, you're very right. In terms, you're actually not right. You explain it well. But what I meant to say is, you all can the charts. You can also reference them not only on his Twitter at the Real Plan C, but if you are here listening on Spaces, then up at the top you can see, if you expand the window where all the people are listening, at the top we're uploading the different charts that you can reference as we talk through them. But I want to throw it back to Dan, and because I know. I've been watching and following you for quite a long time, and you and I have had our own private conversations as well. But considering that you're, I don't want to say you're only, but definitely on your stream, there's a lot of focus, of course, on Bitcoin, which is absolutely necessary, I think, in this space. But then also Cardano. But when you're navigating your charts and your analysis right now, do you have any sort of, other than the basic strategy with MACD, RSI, this or that, do you feel like you've identified in the last year any new special sauce, any new, like a new sort of edge in terms of what you're using for your analysis, or have you just been refining that, and becoming more aware of markets and how they're affecting things beyond just indicators?
Yeah, I think when it comes to like tracking charts, especially, Bitcoin or Cardano or whatever, definitely using the MACD, like the momentum oscillators, as we kind of go week to week, kind of getting a feel of where markets are from kind of a short to midterm, like kind of oversold, overbought type of thing. It's useful. But I have to say, and this kind of is piggybacking off of Plan C and what he said, the cycle right now is, I know it feels like it's just been absolute chaos, and it's like things are different now because, like, really, I mean, things kind of are different with inflation and war and all of these things. But if you put it all aside and you actually just look at a Bitcoin chart, and and it's actually, the tweet is at the top of this space I did the other day. It's a chart that I charted in 2018 at like right around the bottom, around $4,000, and it had the chart of Bitcoin basically going up to 90,000 and then retracing to a key Fibonacci area, which is a 786 line. So basically like 78% retracement. And the chart, you can see it has played out like almost perfectly. And, I was pretty fairly new to YouTube stuff and doing charts when I did that, but it was based off of what we've seen Bitcoin do historically. And like Plan C said, it really is like it's playing out almost perfectly. I mean, we're 700 some days past the 2020 halving, and we're in the middle of a bear market. It's exactly what happened post 2016 halving. It's like 800 some days later, we're in the middle of a bear market. It's the same exact thing that happened post 2012 halving. 700 some days later, we're in the middle of a bear market, and what is really newly interesting to me is, I know we say that the market is heavily correlated to equity markets, and that very much could be the case, right? And maybe even probably is the case. But when you look at the actual cycles of Bitcoin, and if you go in 2015, when Bitcoin's actually hitting this huge bear market low, it's down 85% or so. S&P 500 is just chilling. It's like cruising to the upside, like rallying. So Bitcoin very much was not following that. But what Bitcoin was following was, it was in between halvings. Now, was it a coincidence, maybe, that just in 2018, the stock market was having a pretty big correction, and that just happened to fall in between the two Bitcoin halvings? It could have been a coincidence, or Bitcoin was following the stock market. That's The one thing we don't know, but I think in the formation of this bear market bottom, I really think we're going to find out now for sure how closely the two are correlated, depending on what happens next with everything going on over there in equity markets. But right now, all I can say is we're sitting just above a key 786 line that I charted back in 2018. It's perfectly on point. There's absolutely nothing out of the ordinary about Bitcoin. And if Bitcoin were to actually do it historically exactly what it's done and continue this bear market formation, it would be right around $11,000 would be where it actually does bottom. Does it get there? I don't know. That's like a 30 to 40% swing below the 786 line, which is what it's done, on average, I would say in previous cycles. But I'm just that macro Fibonacci sequence is where it's at for me. And that's why if I am really relying on any chart, it's just the zoomed out Bitcoin chart as like the main roadmap for my plan.
I mean, that's such great info. And I mean, it's just, I do want to point out to everybody that's here listening as well, especially if you're newer, as you're seeing, if especially if you're new, there are so many different points, data points, that the deeper you get into this and the more entrenched and experienced you get, you start looking at and comparing, a lot more, and you're able to compare a lot more data points, and you understand not only the technical context, but also the geopolitical and traditional markets. I mean, I remember during the last cycle in 2016 through 2018, the incredible rise up, and then basically everything felt like it crashed to its knees. 'Cause I did not understand that was part of the market cycle. I just, I stayed in it, but I also didn't even consider ever looking at the comparison or any sort of relevance or the context of traditional markets and how they could potentially, I don't want to say have a direct effect on, but they are a great metric on showing the risk on, risk off psychology of the geopolitical geoeconomic markets, right? So with that being said, I actually want to throw it to my co-host here, Mr. Vet, and then from there, I want to throw it to another one of our regular speakers. He popped in here, so we're going to bring him up in a few minutes, Mr. Caleb Franzen, because I think this will tie in nicely. But Vet, I know you've been in the space for a long time, investing, trading, not only crypto but other assets as well, and you're also very heavily tied in with. You do a lot of real estate investing and that sort of stuff too. Are you how much of your knowledge and experience with looking at what's going on with the housing markets and investing in that are you using in your TA and analysis of crypto right now, or are you using that as just something as an additional warning sign or booster based on where the market's going?
Oh, I mean, it's a really good question. I kind of use it more, like you said, as an identifier. Like right now, what I'm seeing in the real estate markets is we're getting back to another wave of foreclosures, and when people currently right now are having trouble paying their bills, they're having trouble paying for food and gasoline due to inflation. So during these times, I use it more as kind of a judge on where people are standing, since a lot of the property management side of our business, this is where we can see, is there people struggling to actually meet their rent on time? Are we actually outsourcing funds to try and get them relief, things like that. The harder we have to work on that front, then kind of lets me know, okay, this is kind of a struggle over across all the markets. So that's kind of the main reason I use it for. Otherwise, it's besides Bitcoin, real estate is my real hedge. That's my only thing that I put my money into. Otherwise, is a tangible asset. So, other than that, I don't see us getting out of this anytime soon, but I do see us potentially having these little relief rallies here in the midst of it. And, will we carry on through right now and just push through to new highs? I don't think so. I think it's going to take several months, but that several months can contain a lot of chop here with little ups and downs, and nobody's insight on which way it's actually going to go.
Yeah, I definitely feel that. I mean, and that's I'm going to throw it to Caleb now, because he's for anybody, if you haven't followed Caleb, definitely go give him a follow. He's at Caleb Franzen on his Twitter and socials. But he does a lot of, I mean, he charts so many different so many wonderful charts. I follow his stuff religiously because it makes me feel like it makes me realize how much I have to learn. And I'm okay with that. You know, that's why I do these spaces, so I can learn along with you guys, but also share my experience. But kind of piggybacking on that sort of question to Harry, CryptoVet, we have this huge crisis that's basically, I don't want to say impending, but it's looming with the China housing crisis and Evergrande, basically defaulting. But then at the same time, we have this sort of weird scenario in the U.S. With the housing bubble false bubble that was kind of created coming out of the pandemic, and everybody, moving from urban areas to rural or suburban areas. And then the same thing happened when the pandemic started clearing up, people started moving back into urban environments. And I know in New York, prices dropped dramatically, like almost by half, when everybody was leaving the urban environments. But when everybody came back, it didn't come back to basically equal, or parity. The rents basically doubled. And so, of course, right now there's all these headlines, and I don't know, maybe you can help us here, help me. People are talking about how the housing prices are dropping, and there's this sort of fear, which in a way I feel like is a little bit of FUD. It's a little unnecessary because things got so blown out of proportion. It seems like them coming down isn't necessarily a housing crash because of there's so many different things. I'll just leave it there and let you vibe on that for a sec.
Hey, thanks for bringing me up, Kelly. I hopped in when Dan was speaking, and it was interesting to hear his thoughts on the ties just generally between the equity markets and crypto. And I think that's really kind of what my specialty is looking at that kind of traditional markets and how we can bring it back into what's happening on the crypto side of things. But with real estate specifically, I think I've actually been a little bit more optimistic than most people have been about real estate, because people seem to forget when we're looking at something like the equity markets or with crypto, supply is pretty well known in the market. And so a lot of the variation in price is really going to come from the demand side, right? I mean, that's one of the main kind of tailwinds that we have for the Bitcoin and crypto thesis overall, is that we're on this exponential demand and adoption curve, right? So whether that's talking about Metcalfe's law or just kind of like these exponential adoption curves in general. When we're talking about something with real estate, though, supply is a much bigger factor than it is in the kind of traditional equity or crypto markets. And so when we look at what's happening in the housing market, we're starting to see a lot of weakness that's really just come up here in the last 2 months, right? So we had, I think, one of the fastest 2-month annualized declines since the Great Recession, which is obviously, putting people on notice here. And as it kind of ties into how the Fed is kind of looking at the overall markets, how they're looking at financial markets, they're trying to produce an inverse wealth effect. So when we have US consumers who are looking at the equity value that they've built up in their homes, they might feel a little bit more comfortable to go out into the market and have a high demand for goods and services within the economy. As soon as those debt service payments start to become higher, as soon as people are buying new homes at a 5% or even a 6% 30-year fixed mortgage rate. I was just talking with my girlfriend about this on the walk back home from dinner right now, and we were talking about how monthly debt servicing costs have increased so much just in 2022. So at the beginning of the year, it was like $1,700 a month for the average monthly new home payment, right? So for someone who's just getting into a mortgage right then and there, they're basically paying $1,700. Today, it's gone up to $2,700, $2,800 per month. So all of a sudden, we're getting this massive demand sucked out of the system, but supply now, we're really starting to see supply kind of push in. So as we think about just the broader real estate market, it's obviously going to be super important to talk about demand and how these higher interest rates are going to be impacting that demand, aka pushing it lower. But it's also going to be really important to continue monitoring supply and inventory metrics.
Oh man, so much. Let me put down my notepad over here and stop restudying it. No, I kind of giggled when you you were saying when you were walking back from dinner with your girlfriend and you were talking about, I don't even remember the phrase you used, but I'm like, man, that's some high level intellectual talk after dinner. That's a good relationship right there. I respect that. But I want to kind of parlay that over to Jesse, because I know that you're not just a crypto trader. You trade options, you trade traditional assets, and I know in the past, several times on different crypto answered spaces that you've been on here, you've talked about different assets that maybe you're not using it as an exact signal, but you've noticed a few different assets that have, if you wanted to look at it in some sort of correlative signal, were leading Bitcoin's rise or fall. In this case, let's just talk about this fall that we've been in. I feel like we're skydiving since November. But are you seeing anything similar with any of those assets we mentioned previously, or any other sort of correlation sort of emerging that you're keeping an eye on?
Yeah, and just real quick, a big fan of Caleb and stuff too. We share each other's stuff a lot, and I like his work. But not to date myself, but me and the wife don't have those amazing talks anymore. We just turn on the TV and veg out together after we've worked hard all day. So good for you, Caleb. That's why you guys are your youth and stuff is hanging on to it as long as you can. But also, not to date myself, is I went through the 2008 housing, and there's been so many similarities. Of course, the market's always going to be different, right? It's not going to be exactly the same, but there's so many similarities. And I got caught on the wrong side. I was 27 in the mortgage business, and doing fix and flips, and I was part of the thought it was going to go up only forever, right? So there was one 80-year-old guy telling me, don't buy anything else right now. And I'm like, well, he's 80, his risk tolerance isn't there. I've done the calculations a million times obsessively. And something comes into, like experience, right? And the 80-year-old commercial real estate guy, he's like, I've been through 7 cycles. I've seen this 7 times. I'm like, and I listened to him, or I heard him, but I didn't like fully believe it, because 99 out of 100 people were saying it was going to be up only, right? So fast forward to 2022 or 2021, we sold some of our real estate, right? So I had my mom sell some of her real estate. I have other family members who sold the real estate, by the end of 2021. And what I was talking about is it's easier to sell on the way up towards the top, because prices were going parabolic for no reason, right? So in my own personal opinion, for different reasons, whatever. And I said, it's going to be much tougher to sell on the way down when everyone's going to the exits. And, it's slow at first, and then it goes faster and faster. And usually what they say is real estate kind of follows the stock market. Stock market has been correcting 9 months now. And you could say, real estate, it's been, they've been dropping prices more and more in certain markets, not all markets, but like some of the markets where people fled to, Phoenix, Nevada, which is like deja vu for me, like 2008, Austin, Boise, Idaho, right? Like some of these that went like really parabolic. There's other markets that probably won't be as affected, right? Orange County wasn't as affected as some of these other markets in 2008, right? So each one has its own market. So I just want to kind of talk about that real quick, just based on what Caleb's talking about. And a big driver of that is mortgage interest rates, right? So the one thing that I've been telling people is, like, based off of doing the calculations and all this back when, for every 1% the mortgage rates go up for a typical buyer. We're not talking about cash buyers or anything like that. The value of the house to get the exact same payment as Caleb's talking about, 1,700 versus 2,700, to get the exact same payment for every 1% it goes up, price has come down 10% as a rule of thumb, right? So my sister is trying to sell now. She's been, dragging her feet. she should have sold back when I told her. Hindsight, right? So now I did the calculations for her, and I'm like, because she didn't ask me before, but now I'm just offering free advice that she don't want to hear. But I'm like, instead of selling her house at 650,000 to get the exact same payment, she's got to sell the house at 550, right? So it does make a difference, based off of like going from 2.75 rate to 5%. So I just want to talk about that real quick, and then what else am I looking at based off of your question? The some of the things that I've compared is tech stocks, right? So I've been saying since watching Alibaba for a year and a half, being this bear market where it went down 75 to 80%. I watched Zoom, I watched Zillow, I watched PayPal, Shop, Snap, you name it. All these different companies, Disney had a big drop, right? So all these companies that do well, Amazon dropped 65%, right? So all these companies that may or may not do well still had these large corrections, and it's more of like simple, like the simplified version of it is prices just got too far away from where maybe they should have been. The rubber band was stretched too far, and now it's just coming back to its mean. So maybe it's not so doom and gloom. Maybe it's just they just got so far away from where they were or what the value really should be, and it's just correcting. So even if it drops 60, 70, 80%, it's healthy overall. We haven't had a bear market really since 2008, and before that it was 2000. So we're talking about 14 years without a healthy correction, a substantial healthy correction, not only to flush out bad actors, but kind of reset everything. And so to me, I don't get too upset about it or anything like that. I just follow the charts, and I think it's a good thing, and I think it's healthy. It's just if you're caught at the top, then it's not going to feel good, right? So you just have to, trust me. Going through it myself, I had to learn the hard way, right? So I sometimes I voice my opinion kind of loud because I don't want people to go through what I had to go through. So don't go back to zero. Try to salvage something. I went back to zero. So so those are kind of things I'm watching. I'm still watching those same tech stocks, and so my question's always, is it underperforming or is it lagging time wise? Or is Apple outperforming or is it lagging time wise? So I'm always asking that question over and over again and kind of see where if different assets are going to catch up or not. So I know it's a long talk.
It's great stuff. Man, I got something in my throat. Maybe it's a frustration with the never-ending bear market, but that's all good. Again, I want to just shout out everybody. Man, sorry about that. I want to shout out everybody that's been tuned in here on Crypto Answered. If you've tuned in since we started, my name is Kellam. If you're listening here on Twitter or if you're listening on one of the podcast sites, we really appreciate you tuning in. We try to do it every Thursday. Next week, we're going to be doing, September 1st, we're going to be live through my spaces here at Kelly Kellam. That's Kelly, Kellam. It's going to be at 2 p.m. Eastern Standard Time next week. And we got The Rational Root. We got Titan of Crypto, Wendy O. And then if I can twist Plan C and Jesse's Arms, they'll be there as well. They're my roll dogs on this, along with CryptoVet. But I want to throw it. I do want to say, please give every one of these guys at least check out their page, even if you don't follow them. They have great content to put out so regularly, and even if you don't agree with what they're saying, it's good to get different points of views and see how different people in the market are, the analysis they're seeing, because that gives you a good gauge on not only the psychology of the market, but it gives you an idea if you're trading bullish and there might be a bearish movement. You get a very better gauge at what signals, levels people are looking at, and it really helps you get the clearest roadmap possible. So definitely give all these guys a follow. But I want to throw it back to Kevin, and then Plan C, and then Dan. And I think by about then we'll probably be wrapping up at then. But Kevin, you sent me a chart that I shared up at the top. And I'll just give you the floor there. You can discuss that chart. And for anybody that's following here on Spaces, you can see the charts up at the top.
Well, first of all, can you guys hear me? Because I switched my mic.
Yeah, you sound good. It's a little choppy, but it's clear.
Yeah, it's going to sound like a 1980s radio. But so, I mean, just going off, first of all, was just, I mean, markets always do the thing where the bottom, we start total under
Hey,
valuation.
hey, Kev, I'm just going to pause you. Do you have another mic? Because it is cutting in and out.
Hold on, how's this?
Yeah, that's
For
good.
markets, yeah, okay, so we start off under evaluation, the prices run up, we get excessive emotional feedback, which causes over evaluation, and then we dump back under evaluation, and then we return. Kind of just going off of what Jesse said. But the chart that I just had put up is a comparison between Bitcoin and the S&P. And I'm somebody that very strongly believes that there is absolutely a correlation under every circumstance, always is. And that is from the beginning of time in terms of Bitcoin. And basically, what you can see is that every downtrend for Bitcoin takes place when the S&P is volatile. When the S&P is making lower lows and higher, we have a downtrend. And that is because of, I said this before, it's all about confidence. Crypto is a speculation game. So confidence is required, in my opinion, of course, that confidence is required for crypto to go. So if the stock market is unstable, if you look at that chart, you see instability equals downtrend. And the S&P doesn't have to be going straight down. But instability equals downtrend for Bitcoin. That's sort of the equation. And that chart makes it very clear when people are just not sure, then they're not comfortable or confident to speculate in crypto. Because in reality, crypto is the future. We all know that, but it's still early, and people drop it like a hot potato because it's a luxury to invest in. It's more of a luxury for everyone else. We live and die by it, but institutions, they'll drop it like a potato. They're not Bitcoiners, they just want to make money. So as the stock market is volatile like it is now, we bounce less than we should when the stock market's just being unstable, volatile, people are unsure. We're not getting those rebounds like we usually would, and we're not getting them as much. And that chart, in my opinion, just makes.
No, I mean, I really love the wording there. I think that's the best I've heard the correlation described. I think far too often people consider the correlation meaning if stock market up, Bitcoin up, if stock market down, Bitcoin down. And you just characterize that perfectly. If stock market is unstable, meaning it's volatile, it's not following a strong trend one way or the other, then that, instability, when you're discussing, especially on broad markets, like, you're talking about SPY or DJI or whatever it is, any of these mass, these large traditional asset classes, that lack of stability means that there's a huge shakeup of confidence, and risk is going to be the last thing. I mean, I'm here in Atlanta right now, and spending time with my family and also working down here. And my cousin, he's so excited about what I'm doing, and he's always had crypto sort of on the fringes of his awareness. But me being here, I think, has given him more confidence to make that big $60 a week buy. For him, even though he can afford way more than that, for this super, in his mind, super risky asset class. And he makes a $60 purchase. Actually, it was a $20 purchase on Bitcoin, 20 on Ethereum, 20 on Cardano, and Cardano dropped like a 1.5% or something overnight, and he was like shaking in his boots on a $20 investment. So that, for me, what I found interesting about that was it was such a good meter for how the non-maxi crypto maxi, I don't mean Bitcoin, but the non-maxi, or the very new to crypto sort of mentality is, the second there's instability, it's like they just jump out of it. And that's why in Plan C can talk more, and he's talked more about this a lot, but that's why it's so big when we look at on-chain metrics, understanding the difference between long-term holders and short-term holders, because short-term holders are dominated predominantly by people that have we can. So the more short-term holders you have in the market, then the less, I don't want to say confident, the less strong that movement is, and the more likely it is with any sort of movement to the downside, even of a 0.25% or 1%. That's like the end of the world for people, and they just jump out, and then you get all the other cascading things, whether it be long liquidations or whatever that is. But I want to throw it to Plan C now. He's got a couple of charts that he wanted to share, and I always love everything he shares. So take it away, Plan C.
Yeah, thanks, Kelly. Yeah, to speak also to what Kevin was just talking about, like, I mean, the confidence the confidence to come back into the market, I do think that is a huge factor, right? So even though I am following all this on-chain data and I'm seeing so far very similar patterns, I mean, I'm not 100% convinced. Of course, it's all probability that we're going to see these things play out in a rhyming way. I do believe there's a decent probability that some of these metrics, even if they do kind of go through their cyclical oscillations, we do take longer than expected to kind of regain that confidence in the market. Not only because of what's happened with, say, some of the CeFi companies in crypto, but also just with there's so much going on in the world right now as far as the uncertainty. But yeah, to the two charts I just want to quickly go through. One is the red one Kelly posted above, which I actually call the capitulation confluence model, because I'm combining three different metrics, on-chain metrics to do with capitulation. One being the Bitcoin denominated realized losses, another one being something called SOPRA, which is spend output profit ratio, and the last one being the cost basis of the network changing. So when you combine all three of those together and you do a z-score, you can see by looking up at the top there that we, at least in the past, it doesn't mean it'll happen again, but at least in the past, when we go negative, there's a period of about 2.5 to 4 months over the last three cycles where it goes negative, and that's typically when we're kind of bottoming out. That's historically been kind of a good DCA area for the longer term investor, and it's been when we kind of hit the peak capitulation across different metrics. So I kind of put it all together there, and at least historically speaking, once we flip, we haven't really flipped back, because it is a 100-day moving average in EMA on that specific model. So right now, if someone were to look up top there and see where we're at, just looking at that chart quickly, so we're highly negative. We've actually peaked so far. Like it might not be the full peak, but it's so far we have hit a peak and we've come down a bit, and so we're still quite a ways away from flipping above zero. But so it's been right now about 78 days. The last three cycles it took between 76 and 118 days. So yeah, I'll be interested to see over the coming months if that flips back zero. Doesn't mean we're going to go up from there. It just means that we might have gone through kind of that natural capitulation process and shaken out all the weak players or the people that don't really have that high long-term conviction like Kelly was speaking to. So that's the one chart. The other one to go through is called its spend output profit ratio on a 14-day period using an EMA, and that one actually hit 0.84 for the third time in history, which is the lowest it's ever gotten, tied with the 2011 bottom and the 2018 bear market bottom. Those are the other two times where we went to 84 or 0.84. COVID was 0.87. And then I think in the 2015 bear market bottom, it was around 0.9. But we basically tied the two lowest points on the entire Bitcoin history. And that metric is kind of specifically highlighting extreme oversold levels, and also basically like high levels of people just wanting out of the market and basically selling. So yeah, it's like I said, we've only had that happen two other times. That already occurred. It's rare. It's only one metric, but you kind of combine all these things together. And yeah, from my perspective, I mean, like I already mentioned, it's a confidence game. So we need to kind of wait for that confidence to come back. Now that could take multiple months longer than some of these metrics flip, but then we still have a few more months, or who knows how long, depending on macro, to kind of regain the confidence. But to me, that'll be a potential, like once these metrics flip, for example, the Confluence capitulation, once that goes back above zero, I'd start to feel better that the bottom could be in at that point.
Man, you bring so much fire, Plancy. I love it. I really do. I really appreciate it. And again, I want to thank everybody, all the guests that have been spending their time here with us. We got about 20 minutes or so, 15, 20 minutes left before we wrap out. So I want to take it back to Dan. One of the things I've really appreciated watching you over the years is, I mean, there's people that are sensationalists. There's people that are highly emotional, and there's also people that are highly metered and more level-headed. And there's no right or wrong way about it. Everybody has their own personality, so I'm not saying any one of them is better than the other. But in the terms of, especially when the market's in a downtrend, or if we're near a peak, those two times are critical. That you have people in your network, or people in your circle, or people that you're exposing yourself to. That you're making yourself aware of a level-headed sort of approach, and that's one of the things I really appreciate about you in the crypto ecosystem with what you do. So with what you're seeing right now, what sort of message would you give people that are either frustrated or they're feeling, what do I do right now? I mean, what move do I have to make right now? What's the best move? Like, what would be your level-headed sort of approach to that, Dan?
It's funny you ask that, because tomorrow I have a video dropping kind of talking about that, like the emotional side of crypto. Because like at the end of the day, I mean, you and I and everybody else as speakers even we have all of these data points and these ideas and these thoughts. But at the end of the day, we don't know, right? But we sit here and we talk about these things because what we're doing is we're strategizing, in our own ways, on our own time, together, whatever it is, we're strategizing because we want to have a plan. And so that having a plan, it requires no emotion. Like there's no room for emotion. And I say that because it's just a big lesson that I've learned in life, like especially just going through tough things, right? And bear markets aren't easy. They're just not easy for anybody. If you're a crypto investor, a crypto bear market is a tough thing. So, and I speak from failures of my past. When things do get tough, it's like, focus, don't get emotional, sit there until you have a plan, figure it out, make moves, hustle, and you're going to get through that tough thing, right? So the same exact principle, it applies to life. It applies to relationships. It applies to if you have a marriage and there's a tough season or something like that. Anything, you focus and you work through it. And when I'm on social media and I see just there's so much negativity in a bear market. You all know what I'm talking about. But when you see that, you can tell the ones that just don't have any plan, and they are extremely emotional. They're extremely negative. They don't even know what to do with that emotion. So they're taking it out on the content creators, acting like it's all their fault. So I encourage everybody out there right now, especially if you're somebody out there that you started buying in 2021, like at all-time highs, it's okay. It's okay. I think in the macro view of things, you're still so early. You really are. But now is the time to focus and strategize with a plan. That doesn't mean you have to know exactly what's going to happen next. But I just encourage you to stay positive out there and just keep growing.
Man, I that is just such a perfect answer. Thank you for that. I mean, I even need to tell myself that sometimes, or one of the things I had to learn was sometimes no trade is the best trade. We don't always have to be in a trade to make money. Really, all you have to do is not succumb to volatility. You buy and you hold long enough on an asset that has growing fundamentals and growing adoption and growing use cases. That asset's going to go up over time. Amazon is a great example. People talk about the volatility so much of Bitcoin in the last the life of Bitcoin, but let's say even in the last 5 or 8 years, Amazon is very well respected stock company, and they've grown into something of a global empire with how big their company is. And yet, as big as their company is, as high as their market cap is, they have double-digit pullbacks every year. I mean, highly volatile if you're looking at it as compared to other large assets like Berkshire Hathaway, or even just looking at the indexes like SPY or anything like that. But the people that some of the richest people in the world. Jeff Bezos, his wife, I think. I don't think he's among the richest, but like his father, and I think one other, maybe two other people are the only people that have bought and hold the Amazon stock from when it IPO'd for the most part until now. So they endured the volatility and they made money because they took on the stress of the risk if they were stressed, or they took on the endurance of time and had long vision, and so their reward was the large growth in the asset without trading in and out and losing on a leverage trade. They buy and hold. And now there are traders out there, so I don't want to discourage traders from trading, but I do want to encourage, I should say, I would rather encourage people, if you are going to trade, then educate yourself on it and paper trade, do demo accounts and really get yourself used to all the motions, all the actions. But then also, no matter what you trade, you can ask Jesse. I guarantee you he doesn't trade 100% of his portfolio or even half. He's got a portion of his portfolio that he uses to trade, get for capital for trading. And as he takes profits along the way, so I haven't even talked to him about this. I'm sure this is.
Hey, thanks, Kelly. I think, where the conversation at right now is so great. And I think the comments that Dan gave and that you just added right there, Kelly, were fantastic. I come from a traditional finance background. So I worked on the wealth management side at Merrill Lynch for a little bit and kind of entertained going down that career path for a while. And just, broadly trying to think about how we should be as investors allocating. I hop on spaces a lot of times, and it really just feels like some of the bigger accounts just kind of talking to themselves and not really adding as much value for the listeners in terms of actionable insights that people could be taking, not necessarily saying that we're advocating for one way or another, but at least giving people one method or something tried and true. Thankfully, Kelly, your space isn't one of those. So we come on here and we really do try to add as much value as we can. And it's really funny. I was just having a conversation with my uncle yesterday, and I helped him manage his portfolio. And he doesn't dabble on the crypto side or anything like that, but he just has a kind of like traditional stock, kind of bond real estate shindig. And he was talking to me yesterday, and he's like, "Caleb, what should I be doing right now? What how should we be taking action?" And I was like, "Look, let's just I'll pick some different numbers here just to be a little private about his situation." But I was like, "Look, let's imagine a scenario where you have $100,000 in cash right now, and probably the best thing that he could be doing right now, and this is what I told him, we're in a bear market." And I was like, "Look, a lot of the companies that we've been buying, have bought in the past, are trading right now down 20 to 30%, some even more from their 52-week highs." And when you're in a market like right now, where there really hasn't been much of a fundamental shift in the earnings or growth outlooks of these businesses, they've simply been repriced by higher interest rate environment. Because the way that you value any given asset is you take the present value of future cash flows. So when we look at the value of a house, it's saying, okay, well, how much can we rent it out for? If we were to rent it out, would we be able to service the debt and therefore come up with a proper valuation on the home? It's the same thing when we look at an individual stock or at yield tokens or anything like this, right? And so what I was telling him is, in this environment, like, you should just be buying the best of the best stocks: Google, Amazon, Microsoft, Nvidia, some semiconductors. Let's buy a high dividend yield ETFs. Let's buy S&P 500 growth ETFs. Let's just keep piling in on that scenario. And what I told him was, when the market is this discounted as it is right now, what you should be doing is take 5,000 of your $100,000 of cash, so basically 5%, and every month you should just invest 5% of your capital. So every month invest 5K until we get back to new highs or whatever the case is, right? And that could take 12, 18, 24 months. We don't know how long that's going to take. Could take 6 months. But what we know right now is that the market is trading at a discount, and we can apply the same thing to Bitcoin, right? So this is exactly what I've been doing with my Bitcoin position. I raised cash at the beginning of last year, throughout this year, and now I'm sitting on cash and my original Bitcoin stack, and I'm saying, great, I have the ability now to dollar cost average a bit more aggressively. So that's what I've been doing in this kind of low 21,000 range, taking advantage around these levels. And so for him, I was telling him, look, go ahead and move forward with, in this hypothetical scenario, 5,000 a month, and let's see where the market goes from here. But over the course of the next 6 months, you'll essentially invest 30 grand, or a third of your available cash right now. and you'll get skin in the game. That's the most important thing. If you're under the age of 45 and you're listening to this call, the one thing that you should take away is that you should always be a net buyer of assets for any given year. So over the course of that year, it's okay to sell assets, maybe shift into a little bit more of a defensive stance or get a little bit more aggressive at certain times. And so what you could do, you could sell your assets briefly, but what you should do immediately thereafter is start dollar cost averaging again. Because for any given year, you should always be a net buyer of assets. We need to fund our retirement. The Fed is going to continue to print money. The US economy is going to continue to grow. We have all these secular tailwinds pushing asset prices higher over the long run. And we'd be stupid not to partake in those long-term gains. So I'd just encourage everybody, as we're in this bear market right now, don't be caught in the high volatility swings here. Like, I didn't feel any emotion. At least I wasn't acting on it when we were swinging from 18 to 25K. I just continue to stay the course in what I'm doing. And so when we're in these bear markets, short-term volatility creates long-term opportunity, right? So take advantage of these prices, take advantage of these opportunities, and think far out into the horizon, 3, 5, 8, 10 years down the line. And you're going to thank yourself when you do, when we get to that point, because we're buying great assets, high conviction assets at discount.
I said, glory, glory, hallelujah, man. That was, I wish I was able to clip that. I'm going to have to clip it after the show ends. And I mean, that was such a tried and true nugget of wisdom that as I'm hearing it, I'm like, yes, I know this stuff. And I'm like, well, Kelly, if you know this, well, then how come you're not aggressively using this strategy? You know, and I use a good portion of that, but just like anybody, on this call, I'm pretty sure we're all human. And I fall into modes where I get hyper bullish and I put in, if say I have, like you said, a cash pocket, a cash stash on the side, or a bag that's just sitting there, dry powder essentially. And I'll put in 75% of it or 50% of it. And then I feel like anytime I've done that, and I'm doing over 20% in one buy, that's I should signal everybody, because the market's going to drop the next day. And then I get back on the other side where I get far too far too timid, and then prices are going up, and I'm you fight that emotion, and we just have to let that go. So I appreciate you and Dan and Plan C and Kevin Svensson and Jesse Olson, all of you, Caleb Franzen. If you're listening here or somewhere else, definitely check out all these wonderful people. You can find them all. I'm not going to read out all their handles again, but you can go through my Twitter at Kelly Kellam. And again, that's Dan Gambardella, which is Crypto Recruiter, The Real Plan C, Kevin Svensson, Jesse Olson, Caleb Franzen, and CryptoVet. That was such a good sort of ending there with what Dan sort of wrapped it up with, and then Caleb just sent us off with a little wisdom pat on our back. I'm going to throw it to CryptoVet. If you have anything else you wanted to add or say, or anything else you feel like we need to cover, and otherwise, we'll wrap it out from there. I'll throw it to you, Mr. Vet.
Nope, that's it. Thank you guys all for coming out. Got a big show next week. Kelly, make sure you get home safe in your travels tomorrow. And, everybody else, we'll see you again here. And, don't look at the charts too much. Take it easy.
Everybody, thank you so much for joining us here on Crypto Answered. Again, my name is Kelly Kellam. We'll see you next Thursday, 2 p.m. Eastern Standard Time. Have a wonderful weekend. Have a wonderful rest of the week. Keep your head straight. We'll see you soon. Adios, muchachos.